Hello, everybody, and welcome to our latest trading psychology session with Jared Tendler, joined also by John Coughlin, the senior performance coach here at Topstep. Jared, how are you doing today?
I'm good, Jack. Good to see you. John, good to see you as always.
Good to see you. Good to see you. I'm very excited again today to hear what you got to say.
Oh, is
Yeah.
that bookshelf real yet?
No, but it's being delivered today. Well, not this particular one, but something similar.
All right, right on.
Yeah.
So we've been gathering questions for this in advance from the form you filled out to get the Zoom link. So we'll take some of those, but if you have questions you'd like to ask on the fly here, you can put them in the Q&A section and we will get them over to Jared. So that's how that'll go.
Here's one of the most important books that are going to be in that bookcase.
Oh, no.
There it is. There it is.
It's pretty psychedelic, Hoag, with the background there.
It's
awesome.
It's fused with your soul now.
Yes, I hope so.
Well, once again, Jared needs no introduction. I think Hoag was just showing his book there in Pixelated, but written several books on poker, on trading, mindset involved, coached traders, golfers, video game players, the professional kind. Although maybe if you have a lot of problems on your own, Jared might be able to help. But great expert on the trading mindset. We've had a lot of fun with these sessions and trying to just get the questions as quickly as possible because I know we have a bunch here today.
Yeah, we may go lightning round out of the gate just to have some fun. But yeah, no, lots of great questions. Thanks for the intro, Jack. Yeah, I would just say out of the gate, one of the big things that I see so often in trading psychology, frankly, in poker and golf and elsewhere, is that your approach to how you problem solve these issues tends to be weak, mostly because there's some fundamental principles that are not known. And in answering answering a lot of the questions today, I'm going to be kind of talking both about like the practical, tangible steps that you need to take to fix it, but also the change in perspective that really kind of precedes, and I think is the most important change that you can make. So there may be some moments today where I'm going to force you to think a little bit differently. Don't be shy about being confused. This is going to be recorded. You can go back and listen to it. If you need to take a few minutes and make some notes down about what was just said, go for it, because ultimately to change and correct these problems, you have to change the kind of perspective that you're even approaching taking those with. So out of the gate, we're going to take a question from Roderick. And this issue is not unique. There were several questions that were posed around this topic, and it's something that I talk about with clients very, very often. So I suffer from hesitation. I'll wait for a good setup. When it comes, I hesitate. Price goes and I end up chasing. Then I get stopped out on a pullback. Of course, price continues in the expected direction. Instead of having a winning trade, I end up with several small losers and die by 1,000 cuts. I call this monkey brain. How do I tame the monkey brain? So sometimes traders will catalog this as a discipline problem. But really, when the hesitation is that intense, right? This isn't about being patient, although it feels that way. A lot of what it is the fear that's implied and the doubt that starts to really creep up in those moments. So first and foremost, you need to make sure that your strategy is as tight as you may think it is, because there's a trader that I talk about in the book, right at the beginning of chapter 5, who we were able to kind of solve his hesitation by having him tighten up what was a more discretionary style and became not kind of fully, manual in a sense, or automated, but far more crystallized. A lot of the doubts were technical. He wasn't really sure exactly what certain price movement meant, or the indicators that he was using and how they kind of fit together. So you may need to take some time to just make sure that you are rock solid and there aren't any additional questions, because you could really take the doubt that you experience and the hesitation that is sort of implied there as like a legitimate question that may need to be answered ahead of time, right? You don't have the time, right? The execution has to be there. So sometimes the doubt is purely a signal for a weakness in your tactics. Now, if that's not the case, then we start to look at more of the emotional layer and the fear that is kind of part there. So how do you tame the monkey brain? The monkey brain is, I think, another way of describing the fight or flight mechanism, or the mechanism where the emotional system has the power to override higher brain function, right? So your ability to think, to plan, to make decisions is all reduced in proportion to the severity of that emotion. So when the doubt and the fear and the anxiety, right, causes hesitation, but it's, minor, you're only maybe losing a few factors, right, out of a handful. Not crazy, but it's enough to cause hesitation, especially in a fast-moving market. So to correct that, we need to understand what's causing it. Are you fearful of losing money? Are you fearful of making a mistake? Are you fearful of losing, of embarrassment, of failing? Is it not just the losing money from a trading sense, but like a personal sense? So the bigger, kind of thing we've got to look at here is like, what is the underlying causality of that emotion? And that is a deeper thing to kind of work out. Now, there's a tool I use called the mental hand history. There's a question that I'm going to get to in a bit that'll give some examples of this. But for right now, what you want to be doing is asking yourself questions about why it is that you're hesitating, what it is that you're fearful of, what it is that you're worried about, right? And if it's not tactical, then it gets a little bit more on a performance side. And that's what you've got to dig out in order to change that. Now, the next piece of the puzzle, once you figure that out, is like, you've got to catch this early. So it's unlikely that this is happening on every trade. It's probably happening on certain trades, and maybe at certain times. Maybe when you're down money, it happens more, or when you're up money, it happens more. Find the situations where it's likely to occur, and then you've got to apply a correction kind of in those moments. Now, the mental hand history is what's going to help you to identify what that correction is. But, at a minimum, right, if you have a clear decision-making process that is refined from the technical work that I mentioned before, then you're going to be able to make some progress here. And it is like any aspect of the mental game, very often like an analogy I use frequently, chopping down a tree with an axe, right? It is not like you get a chainsaw that just cuts that thing down. This problem is not going to go away like that. So you got to be aware that the progress is going to be having less hesitation. It might still cause you to make the mistake. Don't feel like if you make the mistake that you haven't made any progress, right? You're working to systematically over time reduce that hesitation. It's not going to change all at once. All right, next question comes from Linda. And again, this was very, very common. How can I stay in a trade when it's going in my favor? I tend to want to close the trade and take profits way too soon. So this is another form of fear. And the same kind of thing can occur here, right? So there might be a fear of mistakes, there might be fear of losing money. I mean, there's a lot of protection here, right? To avoid having that position completely reverse on you and stop you out. And the amount of pain that you experience, the amount of either anger or fear or just anguish is greater in a trade like that. I'm not saying for all of you, but for some of you, is greater for a trade like that than when it immediately is red, or it's kind of hovering around break even and then stops you out. Why? Because at that point, when you're in profit, you're now losing that on top of your actual initial position size. So part of the problem here is that once you feel like that money is already yours, that profit is already yours, you've now kind of become attached to it and you have more to lose. And so the fear is losing something that is in your hands. So number one, the first thing you need to do is to only allow yourself to attach to realized profit. Unrealized P&L is nothing, really. I mean, as long as you're in the trade, all options are still on the table. The probability may feel like it's greater because you're now closer to your target, but that actually isn't the case. So for some of you, this problem can be greater when you're coming out of a drawdown, or when you're still in a drawdown, when you're not really that confident. So the fear, right, at that point is, well, if this reverses and stops me out, well, then I'm going to kind of feel more set back, and things are going to be kind of much worse. I'm not kind of able to make the progress that I want. And so if I can lock up a little bit of profit, then I'll feel like I can, kind of start to build some momentum. And I would say that for some traders, that actually is not the worst idea. I tend not to take kind of like polarized black and white advice, unless it's something that is, kind of truly in that category. But most of the time, there's a lot of gray. There's a lot of situations that, the answer is it depends. So for some of you, there are times when this is a correct strategy, but then there are others where you're actually trying to build and grow your account, that this is actually handicapping you. And so we start to like peel back the layers of the fear that also can be there. And one, I think, common one here is almost like a protection against your confidence. You don't feel that confident as a trader yet, as your baseline. You might feel confident at a particular time, but in general, you're not that confident yet. So in a way, you're not really locking up profit, you're locking up confidence, because to you, P&L equals confidence. The problem here is that by doing that in this way, you actually are not building real confidence, because you know that you're violating your rules. So what kind of confidence are you getting from that? Okay, yeah, you've got some money in your account, but it's not really a process. It's not really a skill set that can grow and continue to evolve. So what are you really gaining? You got a little bit of money, but nothing that you can actually build on. So one, I'd say a kind of common thing that's helped a lot of clients here is to really look at the risk of continuing to lock up profit, and to make that feel more and more like a bad idea, like a thing that is actually going to paralyze your ability to progress, that the risk is a lot greater to lock up profit than it is to let it run and have it stop you out. Because if you're executing your system to the full effect, you're going to find out whether or not either it's working or that you have the capacity, or if there are other problems that are going to limit your ability to move forward. So by continuing to make this mistake again and again, you basically kind of guarantee failure for most of you, right? I mean, to be profitable with this problem takes an extraordinary edge, which I suspect that many of you are not there yet. Okay, next question from Ahmad. Excessive thinking and its impact on mental health and performance. Is it necessary to focus on one thing in trading and not pay attention to all other things going on in the market? How do I rid my mind of all the negative thoughts and their symptoms? So here's the thing. Excessive thinking is not the problem. Yes, I understand that it seems like the problem because that's what you see. But you have to understand that thinking that is excessive, and I would say uncontrolled, is a symptom of an underlying emotional problem. And I mean, we start out here with talking about a lot of fear, and I would suggest that that's probably the case here too, right? Fear, anxiety, nervousness, pressure, doubt, worry. Those are all kind of in the same bucket. And it is a very, very common driver of excessive thinking. So when we look at the functionality of thinking, okay, I know that might sound a little weird, but actually think about it. Why do we have the capacity to think? What makes us different from, animal species that don't have our ability to think? Well, what it does is it allows us to kind of put puzzle pieces together, right? We can learn faster because we can have images in our mind, and we can think about them, and we can weigh different options without actually having to go experience it. So it speeds up our ability to learn. But ultimately, what we're doing with thinking is trying to put pieces together. So when thinking gets excessive, imagine somebody frantically trying to put together a puzzle, right? And you're just grabbing pieces, trying to find something that's going to fit together. Generally, that's going to happen because you're going about problem solving in completely the wrong way. It's so in this situation, what I would rather you do is take a step back and ask yourself, all right, what am I worried about? What am I fearful of? What am I feeling nervous about? And if you ask that question, it starts to change the game. You're not trying to solve the frantic puzzle that is whatever your thoughts are. You're trying to understand why you're even in this situation. And that's a very important shift in perspective, both for excessive thinking and frankly, any emotional issue that you don't really understand yet. Very often, many of you have a lot of information about your problems, but you're not even thinking about them in the right way because you're too often dealing with the symptoms or the byproduct of that problem, right? You're dealing with the FOMO and the hesitation and the cutting window short and the excessive thinking, and you're going to battle against those problems when the real problem is the underlying emotion that's driving them. So excessive thinking is just a symptom of an underlying problem with emotion, as I said, generally fear, because anger does the opposite. Anger shuts down your thinking. Most people kind of go in this like blind rage, whereas fear drives your thoughts a lot more. Next question comes from Dennis. On a day when trading is not going your way, do you ever just say the heck with it and walk away for the rest of the day? Yeah, you do. So again, there's, the answer depends here. There are some times when you want to be pushing yourself to continue to execute your strategy and your mental game strategy. Right? If you're struggling, mentally, and you are prepared to kind of go to battle with that with a good strategy, then yeah, you need to be in there to make progress. It's kind of like an athlete who, for me, golf is my big sport. For me, like I can work on my swing on the range, just like you all can work on your trading in the sim, but you've got to be able to prove it in the live market. I've got to be able to prove it on the golf course and in big tournaments. And so that transition point to that is part one, but two, right? It's in those moments where I can kind of cement that progress. So when you have a good strategy, you want to be able to push yourself to continue to trade at a time when it's really hard. But if you don't have that, then you're effectively kind of gambling that you're going to get lucky, and that's not a way to make progress. So the way I would kind of frame this is, if there's a risk of re-injury, right? Re-injuring your mind, your emotional state, your confidence, your motivation, or of course, an injury to your account, then walking away is a smart decision. Now, do you always walk away for the rest of the day? Depends on your style. Do you always walk away? I would suggest walk away, do a bunch of writing, try to better understand why it was so hard. Don't just give yourself a break, because sometimes we can get into some easy procrastination, laziness, motivational issues can kind of pop up in that moment. You're going to make yourself kind of give yourself an out, make it too easy on you, because subconsciously we all want this thing to be easy. So yeah, but you can't give yourself that kind of a break. So I want to keep your feet in the fire, but not the fire where there's injury. So do a bunch of writing, try to better understand what the heck's going on, and see if that feels a little bit better. Maybe
Jared, can I chime in for a second on this one?
Yeah, of course.
When I get to a point and it's early in the day and I'm just not seeing it, not feeling it, and I tell myself, you know what, I'm probably better off just walking away, I deal with a little bit of guilt. Like I should be doing something. And your idea of writing, journaling, thinking about why you're in the position you're in has helped me deal with that guilt quite a bit. That's the way to walk away, is not just walk away and say, screw it, I'll try again tomorrow. It's, why am I in this position? Is it just that I'm not seeing the market? Is there something else going on? So dealing with the guilt of walking away, you can deal with that by working on the program, working on why you're in the position you're in. But there's always that little voice in the back of my head that's always saying, but what if? And that little voice has cost me more than I can say. So, when you're saying that what if is tempting you into staying in a situation that may cause damage to you, recognizing the difference and doing the work, making sure you don't have that guilt feeling for walking away, and not listening to that little voice that says, what if, which is basically FOMO.
It's absolutely FOMO. And the fact that you now know that what if is what it is, then that's a signal for you to know that it's BS, and you feel free to walk away.
100%.
Yeah. And I think the thing, so I'm psyched that you made, that strategy has helped. And I think, for everybody else, like you can make a game plan that kind of runs the whole kind of gamut with a little bit of a decision tree in here. So you do a bunch of writing and let's say that's 10, 15 minutes. And then you kind of by default, you give yourself, another 10, 15 minutes, go for a walk, get some food, water, fresh air, whatever you need. But then you're going to kind of come check back in. And it's not checking back in with the markets per se, you're checking back in with yourself. Are you ready to go back in and battle a little bit and see if you can make some progress? And the answer might be, I don't know, because you don't have enough data yet to be that kind of tuned in and aware of your emotions. That's fine. So if you do go back in, right, you're going to limit your position size smaller, just so the emotional volatility is not going to be as high. And then it's a test bet in a sense to get feedback on where you're at. And if you pass, then cool, right? Stick it out, maybe raise your size a little bit. But if you don't, then you're immediately gone. And now you need a longer timeout, and that timeout might be an hour or two, or it might be the entire day. But I think you can have a little bit of flexibility, but the main thesis here is you want to be able to come back capable of making good decisions and or working through, whatever mental or emotional stuff is kind of blocking you from doing it.
You don't want to just walk away just so you can play 18 holes.
I mean, we all would want to do that. But like I said, it becomes an easy kind of excuse to say, oh, today's not my day, and you're moving on. And I think you want to keep your feet in the fire here. Okay. Salim is asking, how do I master the art of detachment? And the way that I would kind of frame this is, I don't love the word detachment, because what it doesn't do is give you the direction on like what you are attaching yourself to. And I know that there are philosophies out there that are looking for like a state of non-attachment. And I fundamentally don't understand how that's possible, right? So for me, it's all about what are we attaching ourselves to, and is that thing stable? So if generally traders are overly attached to P&L, to money, and of course the variability in your results in the short term makes you ride a roller coaster that may not necessarily be an accurate form of feedback that you need to know how you're doing. So we attach ourselves more to our own process, our own execution, our own decision-making around when to take a break or not, and ultimately all of the decisions that you make around trading. Attach yourself to that, have emotional consequence to that, and have that be greater in the short term than the emotional consequence of your your results. So there's a tool I use called the A to C game analysis. It's very kind of simple in theory, but basically you're trying to define your A game, right? Trading at your absolute best, both from a mental standpoint, emotional standpoint, and also a kind of trading tactical decision standpoint. Your B game and your C game. So A game, B game, C game, best, average, worst. And when you do that, it gives you the real-time feedback to know, all right, cool. I've just lost 3 trades in a row, but as I look at it, yeah, I'm in a really good headspace. I've made very well thought out decisions. So what is the answer? The answer is keep trading, keep firing. You're in a good spot. But if the opposite is true, right? You've won 3 trades in a row, but suddenly now you realize like greed is kicked up. Your entries are getting way too loose. Your risk management's getting way too loose. Yeah, you need to take a break and quit in order you can come back until you can make better decisions. So it's attach yourself to execution and process, not to P&L. That's what we're after. All right. Next question goes to that mental hand history that I was just talking about. And so this person, Parisa, is asking for a couple examples. So I'm going to share my screen here. And we're going to go for a couple examples. Let's see, we'll do this one first. All right. Everybody can see that, I assume. Just give me a quick thumbs up that we can. Okay. So, chat, help me out here. See you. No.
What just happened?
Oh yeah, we see it.
Oh, you see it. Okay. I just want to make
we
sure
do.
everybody can see my screen.
Yes, sir.
Just
Oh yeah, I
pausing
forgot
before I
we're
start
the only
reading.
people that can talk.
Yeah,
All
yeah.
good. Yeah.
All right. So this is the mental hand history. Okay, there are 5 steps in this. Okay, the first step is to describe the problem in detail. The second step, which is what she is having trouble with, is explain why it makes logical sense that you have this problem or why you think, feel, or react this way. Step 3 is to explain why that logic is flawed. Okay, I'm gonna cover this. Okay, this is a really important tool. Then step 4 is to come up with a correction. Step 5 is to explain why that correction is correct. Now, what makes this strategy different than a lot of other kind of problem-solving tools that are out there is that we are trying to figure out what the root problem is, okay? So describe the problem in detail. That's not really the real problem. This is the symptom, right? This is the hesitation. This is the FOMO. All these problems that are out there that you're all dealing with get put here, okay? But then to really get to the root of it, we have to do this next step. And this one is really challenging for a lot of people, okay? Explain why it makes logical sense that you have this problem or why you think, feel, or react this way. To many of you, these problems feel illogical or irrational. You're like, it's dumb. It's because I'm stupid. It's because I'm an irrational monkey. Like you just come up with any things to say about yourself here, but none of that is actually helpful. And of course, you know that. So the more helpful way is to try to switch your perspective a little bit and actually ask yourself, why does it make sense that I have this problem? Okay, so let's just go through an example to make it a little bit easier. I get into positions even though I know I will need to get out of them in a few days. Example, like the Fed announcement, which results in a very volatile market. So this is a trader who is doing something that they know that they shouldn't. And I can imagine that at least 100 out of the 122 people that are here has been in a situation like this, myself included, okay? And when that happens, it means that there's more emotion at play that is blocking your ability to translate your thoughts into your actions. And so you're kind of reverting back to old habits, okay? So now, why does it make logical sense that you have this problem? It's a combination of FOMO, the idea of trying to do the opposite of what a normal trader would do, lack of experience in the markets. I think that experienced traders will stay on the sidelines, and staying on the sidelines will be a normal thing to do. So let's do the opposite and see if we can profit from that. Often doing the opposite is profitable, okay? So is that all correct? No. But does it make sense? Yeah, it's not crazy, right? We all have these things in the back of our mind. I'd say another common one is expecting to make money from every trade or every day. And so, logically on the surface, why do you hate losing? Well, it makes sense because deep down, I feel like I should be making money from this trade. Like, is it purely illogical? No, it makes some sense. It's like maybe what you wish were happening. Okay, so that's the point of it, right? Step 2 is really about trying to remove all of the self-criticism, any negative things you have to say about yourself or your actions, and just try to change your perspective and try to be a bit more pragmatic and understanding about why you might actually do this. So just to kind of help you all out with this process, let's go through step 3. I really don't know what the majority would do. The reason I show this example is because I love how well this person just kind of called out their own BS, okay? I think I am going against the crowd, but I might be doing the same thing as the retail crowd. I just have no way of knowing that this is the opposite or if it actually has some edge. I have not done short-term position trading as much, so I usually think that I will get out before this Fed event, but I also get this hunch that maybe I will not get out and will stick through it. But of course, so far I've always gotten out before big volatility events. Experienced traders tell you not to get out. Okay, you get the point. And so then this is ultimately what you are correcting in step 4. And when I say kind of go to battle with your mental and emotional issues, it's this logic that you are battling. So when you have this sort of urge to do something you shouldn't, right? Use that as a signal. All right, there's emotion at play here. And take a deep breath here. Think through it. All right, what's going on here? Why does it make sense that I have this urge? And you can kind of do this, in writing. You can also kind of do it on the fly in the moment. And then the correction that you come up with is what you ultimately are going to kind of use to correct that emotion. All right. Now, I know I said I was going to do a second one, but for the sake of time, I want to make sure I get through more questions here. All right. Next question. What are some good techniques to rewire your brain for optimal performance? Trading is a very mental game. And oftentimes I lack the confidence stemming from a series of losses that can have you, that can lead you to underperform even farther. So the reason I put this question right here is because you can, of course, use the mental hand history to rewire your brain, because it's getting to the root cause of why you are lacking confidence after a series of losses. Now, it might go to what I said earlier about, needing that A to C game analysis as a way of getting better feedback, right? Our confidence relies on feedback. Just imagine how awful you would feel as a trader if you had a really, really negative mentor or coach who was constantly berating you, right? In order for you to maintain confidence, in a situation like that, you've got to have some real deep belief in yourself. And most people don't when they're trying new things and getting into trading like this. So if you're doing that to yourself, because the feedback that you're getting is actually wildly inaccurate relative to your progress, right? Which is what happens when you focus on results, right? When you attach yourself to results and not to your execution, your decision-making, and your process, then your confidence can go down when you don't deserve to. And if your confidence goes down because you deserve to, then cool. We want that, because then it's going to motivate you to fix the problem, which is not your confidence, but the reasons that your process, your execution, your decision-making is poor. Okay. And so then how do you rewire it? It's just about getting a ton of training, right? Getting yourself to focus more on process and execution, and having your confidence be aligned with that. And then fighting against the urges to, think more about P&L and results in the short term. All right. I'm going to get to a couple questions that have come in through the chat, because I know there's many of them coming in. So I don't want you all to get neglected here. So first one is, why is it that the fear of missing a larger run towards one target is greater than the fear of taking partial profits, or even fear of taking a loss? So this goes to what I was talking about earlier. And the only thing I would add here is that there's something called prospect theory. Now, prospect theory comes from Daniel Kahneman, right? I mean, if you all read Thinking Fast or Slow, that's our guy here. And if you haven't, read that book, because it's phenomenal. It goes into a lot of depth around cognitive biases, the prospect theory being one of them. And prospect theory basically describes how we have a kind of an asymmetrical relationship with the emotion around losing and the emotion around winning. So the idea is that losing hurts more than winning feels good. And that is not a law of human nature. Okay, there are people that actually have the opposite, which can cause problems of a different sort. But the idea is that many, many people have this problem. And so the pain of having that position reverse and stop you out is greater than the incremental emotion that you get from having it go, let's say, the extra 10% to hit your target. The problem is, right, that, and the way to change this, and look, Kahneman talks about this, so I'm not making this up. When you can change your perspective on that relationship, you can change this pattern. You don't have to become a victim to prospect theory. So how do you change your perspective? You do what I said earlier, right? You understand that the pain in the moment may be greater, right, of having that position stop you out. But the pain in the long term is exponentially greater, right? The death by 1,000 cuts hurts you that way, because now you're never giving yourself a chance to succeed. How painful is that? You're not going to experience it in one single moment. You're going to experience it over years, if not decades. Okay, that's how you can change that dynamic. When you have an attachment to a pattern like buying the bottom or a top for an extended period of time that has been successful a few times, but that does not have consistency in the long term, how could one detach from this pattern? Obviously, the times when one was successful in the short term in taking such patterns, right, you get a large feeling of success in getting it right, and thus the attachment to the pattern. So the mental hand history can be helpful here, but the bottom line is that you have to, and I'd say in going through the mental hand history, you have to get to the idea that you got lucky. You were not right. If that's not a long-term viable strategy, which we know is not, right, picking tops and bottoms. You got lucky. That's it. I mean, so what makes you different than somebody that has won a bunch of scratch tickets, 5 in a row? Does that suddenly mean that you are profitable in the lottery? So understanding that you are attaching yourself to something that is gambling based on luck, there's no sense of control there. And then define the strategy that you can have the ability to fully control. That's how you kind of begin to make that transition. But understand that you're going to keep having those impulses to want to catch tops and bottoms, and you've got to work through, right? Rewire those moments, work through it, and it could take, months on end, truly. I think a lot of people sometimes think, oh, like, cool, I fixed it once, right? But again, you're chopping down a tree. It's not a chainsaw. So it's going to take a lot of time, and you're going to have a lot of impulses to, as John said before, right? Those what ifs, they're going to keep coming. You got to battle up against it. The more times you win that battle, the quieter and quieter that voice is going to get until it eventually will disappear. Every time I decide to exit a trade before my target gets hit, the trade will go in my original direction. Every time I decide to leave a trade alone, the trade will not hit my targets and I will get stopped out. How do I deal with this mentally? You deal with it mentally by understanding that that is not true. This is called selective memory. Okay, you've attached yourself to these situations. There's no possible way that this is happening all the time. How to understand your progress as a trader. I think the A to C game is actually really helpful for that, right? You can actually see your skill set in real time. And then what you can do also is to define all the areas of your game that you don't have to think about anymore, right? What kinds of decisions, what kind of comprehension, knowledge, skills that you have that you don't have to think about anymore. They're just kind of becoming automatic. And then you can actually kind of measure day to day how good your execution is, how good your process is, and that adds your ability to see progress. At the moment, my bearish bias is too strong, and therefore, that's a big question. Okay. I want to ask if you have met both ultra successful scalpers and swing traders, and I can see, and they can see eye to eye. I met an extremely successful old man who's a scalper, but my strength is analysis of swing patterns, swing positions. So what actually ultimately success in trading, end of month P&L? Yeah, I do work with both. And honestly, this is the thing I love about trading, much as I like about poker, and frankly, golf too. There's a lot of ways to get it done. And I think the universe of trading is so broad and so vast that it creates a lot of opportunities for you to kind of figure out what your fingerprint is. Like, what is your unique strategy? What is the thing that, not just your unique strategy, but also like your unique way of seeing the markets, seeing opportunities, and what types of market, what types of instruments are you using? I mean, there's so much variety. And so I think sometimes traders can get, a bit too kind of myopic early on into thinking, oh, this is what I'm going to trade for the next, 10 years, rather than, just being a little bit more experimental early on and just trying a bunch of things, kind of like kids do. I've got an 8-year-old, like, it's great to see, she just tries a bunch of stuff, and as long as she tries, it's good enough for me, because she gets some data points and gets to kind of experience how that feels. And so, yeah, just kind of keep your mind open. But yeah, there's lots of ways to get it done. What is a good way to learn from my mistakes and use them to improve my performance in the future? Write them down. I think people rely on their memory way too much. All right, I will come back to questions posed in the chat and go back to a few that come in advance. All right, Kilbram was asking, how do I get in the right mindset as a beginning trader? So number one, I think what you're talking about is the mindset around learning. And so go back into your personal history and understand if there have ever been problems with you learning new things, or any, kind of mental and emotional issues that kind of came up during that time. And if there have, then, start to go to work on them, even if they haven't showed up yet in trading, because they will. Okay. So I think the right mindset of a beginning trader is one that is open-minded, right? Agile and able to try a lot of different things. Having a good sense of deference, right? So you think about kind of having John at your disposal, or even me, right? We know things because I've been coaching for 18 years. I spent 4 years getting licensed and educated. So figure kind of 22 years in this game. So yeah, I know a few things. And so often I see traders who often will like tell me what their problems are, right? A new client will come in and they'll spend the first 10 or 15 minutes just riffing on what their problems are and saying, oh, this is what I've done. This is the corrections. Like, why are you here, man? Like, are you here to tell me what's going on? Are you here to get some advice, get some perspective, and work through it? So I think having a little bit of deference, a little bit of open-mindedness to people that, know more. Now, are we guaranteed to know the exact right thing for you? Of course not. But if you're not even open-minded to hearing what we have to say, then you're not really properly weighing and even using. Because sometimes, I learned a lot just from what somebody might say to me might be completely wrong, but because I was open-minded, it allows me to think of like, oh, it's not exactly that, but it's this, and I can use my brain to do that. But if you're already closed-minded, then you don't even get that opportunity.
Well, and I think a lot of people, Jared, already know the problem, but they don't do the work. Your quote from your book: if you do, the system works if you do the work. What do you know the problem, what are you going to do about it?
Yeah, that's a great point in addition here. So yeah, right mindset is doing the work for sure. And I'd say, right, that would be in my mind kind of categorized as like, problems with learning, right? If procrastination and laziness or getting overwhelmed or stressing or being a perfectionist is all kind of in that category that's going to block you from doing the work, or frankly, you just haven't had a lot of experience yet doing the work, right? You've maybe kind of gotten away. There's a lot of traders I worked with who were smart, breezed through, middle school, high school, primary school, whatever. And they just never had to work that hard. And all of a sudden you get to trading. It's like, yeah, intelligence sometimes can be a liability. So, you actually have to learn how to work. So yeah, thanks for bringing that up, John. All right. Another very common problem. I'm in a boom and bust cycle. I can follow the rules, trade well for weeks, and then in a few days I lose it. And it's not always related to volatility or market structure as I track those. Some days I just want to fight. I always seem like I'm battling myself. So this is a more intense problem. In the book, I categorize it under desperation, which is in the confidence chapter, chapter 7. And it is a very hard problem to break, in part because of what we're dealing with here, right? There's a lot of kind of layers to it, and it doesn't often feel like a confidence problem. But when you kind of reach that like the depths of desperation, which is the bust cycle, where your P&L is dropping, you end up tripling positions, over trading, re-entering positions rapidly after getting stopped out. There's a host of mistakes that feel wildly out of control. It may even come, in forms of anger, like almost like you're kind of raptured and you kind of can't get yourself out. You're like paralyzed, and at some point you might realize what you're doing is wrong, but you can't stop it. For the problem to get that intense, confidence has to be weak. And it may not feel that way, but I promise you that it is. And there's a lot of advice in the book that I talk about it. It's way too much to get into today. So I would suggest, both, looking at that chapter, but also following, I think there's 11 steps. It's not for the faint of heart, but if you're motivated and you want to do this, if you follow it, it's a prescription that has worked and can work for you. The other thing I will say, because not everybody has a problem like this that is as severe as I'm describing, sometimes the problem is more simple in that what is happening during the boom cycle. So you don't realize that you become overconfident. And the best description I can give here is like you're like that cartoon character that's kind of run off the cliff and you don't know that you're on a cloud. And once you realize it, then of course they drop down to earth. That's what happens, right? And so if we were truly measuring your execution, at the kind of the tail end of that cycle, you're in your BHC game. And so you're already making mistakes and you're already overconfident. And then a couple losses just kind of crack that overconfidence, and then you crash and then do a bunch of dumb things. So if you can correct the overconfidence, then you can start to round out the severity of that upswing, because you are going to take less risk. And that risk less risk may result in smaller wins, but they're more sober decisions. You're not kind of drunk and, high in your own supply here in a sense. And so Akira was also asking, like, how do I stop breaking my personally daily loss limit? Now, that question may link right back into what I just said. It also may be that anger is really what you're dealing with, right? Revenge trading, the hatred of losing can really kind of drive very, very similar patterns. And so the simple answer is you've got to understand and correct the emotion that is driving those violations, right? Because especially in the moment, you might be aware, okay, I know what my DLL is, but I don't care in that moment, right? The I don't care, the F's come out, and that becomes kind of the excuse to allow bad behavior to happen. But you've got to know that the emotion is what's getting you to that point. Next question, is it better to be rigid with discipline or fluid with one's approach to discipline? This is implying in the context of a professional trader's life, an approach to the market. Another way to look at this question is what should be seen from the lens of a pure mechanistic versus what aspects of trading and the psychology of successful traders should have more leeway. It's both. I mean, and it depends on where you are. I don't care if you're a professional trader. There are times where you need to be rigidly disciplined. And I think that's around your process, like what you have defined as your daily process. If you are violating that on a regular basis, then that's an emotional thing that you've got to deal with. Or it could be just a weakness thing, right? You tend to get bored and distracted, disinterested, and you kind of lose connection to your longer term goals, right? Discipline is kind of your strength, is your tool for achieving your longer term goals. And if you lose connection to that, then like discipline kind of fade away in the short term because it's not really like the purpose of it is not really being seen or felt. And so you can kind of bring your goals back in and make them forefront, understand that there's a consequence to not taking these actions. So that's one. Two, yeah, you absolutely can be kind of overly disciplined. So that daily process should be framed under the umbrella of what is going to consistently allow me to be at my best, what is going to consistently allow me to deal with, my weaknesses, whether they be emotional or technical, properly, so that I can kind of contain them and maximize my daily performance. That's what that process needs to be. And if it's not doing that in a way that's like kind of feels too rigid, maybe not allowing you to have enough, discretion or intuition, well, then it's a problem. And then yes, you are, kind of overly disciplined in that way. All right. 12 more minutes here. We're going to go through a few more that come in.
Jared, can I ask you a question?
Yeah, of course.
I've been trading for a long time. I've had lots of different trading psychologists, different performance coaches. I'm a performance coach just through my experience with all of the things that I've learned through all of that experience. And one of the things that was an issue for me early on was actual fear of change, fear of positive change. One of the psychologists that I was working with just said, you are doing everything you can just to stay where you are. You don't want bad change. You don't want positive change. And I think a lot of traders deal with that without any knowledge of actually knowing that it's there. Do you see this a lot? Is this something that, I'm sure that if I've had it, I'm not the only person who's ever have had to deal with this. But what does somebody do to even recognize the fact that, we're in trading for change. Trading is all about change. We profit from change. We're trying to change. We're trying to make our lives better. But any change in life is scary for people. How do people get past this?
Yeah, I mean, I'd look at it from two ways. And yes, you're right. It is very common. Number one is change sometimes can be negative, right? Change sometimes can lead you in the wrong direction. So when you have, I think, a really good sense of that A to C game for yourself, the growth comes automatically when you're continually aware of what your weaknesses are that are your weak points. And if you keep hammering away at those, then the growth is kind of implicit, right? It has to come because as that gets solidified, the back end moves forward, and there's more kind of freedom and opportunity for your mind to organically come up with new ideas that are likely to be quite, kind of connected to your existing strategy. Too often, I think, if you don't have a good sense of yourself, your strategy, et cetera, you might end up kind of looking for opportunities that may not necessarily be as connected to you, and they quite literally could lead you in the wrong direction and be bad for you.
Thank you, Jared.
You got it.
Back to the inchworm.
Exactly, inchworm. Exactly. The other thing is that sometimes people have a fear of success, and some of that can be because your confidence is artificially small. And so there's, also exercises in the perfection section of chapter 7, that relates to, how you can kind of grow that base of confidence in a way that's, kind of more appropriate. All right. So here's somebody from New Zealand. Good morning to you. Be interested to hear what your thoughts are on clearing your mind prior to opening the charts and developing a flow state. What kinds of exercises do you use? Any breathing exercises? Does this question make sense? Yeah, it definitely makes sense. I'm not married to any one strategy. What I am, though, is interested in the formula for each person to be at their best. And when you think about it like it's a formula, and you're not thinking about it like it's like one thing that's going to kind of just snap you in there, then you understand how to be in more command and control of your own kind of peak performance. Peak performance is a dynamic state. It is ever changing and growing, just like you are. And so when traders or poker players or golfers kind of get into a state where they're trying to recreate it on the fly, then I think that things have become a little bit too rigid, and their growth curve is eventually going to flatten in a way that's going to be problematic. So I would much rather you, kind of almost like the essence of like back testing times where you've been in peak state, right? Go back and look, how is my sleep, diet, exercise, process, emotional state, focus, what things was I doing, was I not doing, that allowed me to get there. And you can kind of brainstorm, come up with an initial game plan, and then see if it actually starts to become reliable. But I think in general, like having a clear mind is a big one. So yeah, what you're doing at the start of your day is really important, right? If you're on your phone for an hour, if you're just kind of, absorbing tons of educational material before you go trade, that's not really helpful. There's an ideal amount of game planning, and kind of analyzing, screening that you need to do. Sometimes it can be excessive, and if that's the case, then you got to dial it back and understand that an ideal mental state can certainly make up for, if not exceed, your attempts to overly prepared. There's a tendency to watch or follow a lot of sources of information and opinions that create a bias in your mindset. How much is too much when it comes to consuming information that helps you to figure out how the day is going to be? Actually, a lot of what I just said is very much true here. I think you've got to think back to, what is that kind of optimal for you? And it may not necessarily be like a day over day thing here. It might be a week over week. And so if it's something that feels uncontrolled, then we're probably dealing with a confidence issue here, right? That you don't feel like your opinions, your ideas are as valid as somebody else's. And so you're kind of deferring to them, and then, kind of constantly trying to consume enough to give yourself a game plan, but that's not really your game plan. It's just a random mishmash of puzzle pieces that probably don't fit for you. But yeah, I think if it's just the first part and it's how you're kind of balancing it, then you just got to do some analysis and self-reflection to figure out what is right for you. What is the state of mind that I should have before starting, and always remind myself of a simple exercise that I do before? Again, same idea, right? It's not a state of mind per se. It is a process to get you into your ideal state. When I hear state of mind, I think, what's something I can think about? What's something that's going to snap me into, like, oh, if I just like put on this sweater, that's going to make me have the right state of mind. I don't believe in that, because it actually limits your upside. Yeah, it might work temporarily, but we don't know that it's not a placebo, right? A placebo being, the medical equivalent of taking a sugar pill, thinking that it is cholesterol medication and having it work, right? That's a placebo. You can take something that has no medicinal clinical effect And because you think that it will, then it does. That can happen mentally and emotionally. We don't want that. It's not controllable. And it certainly will break at some point. Before finishing up today, could you give a brief rundown of how your trading psychology course goes and what happens? So what we're talking about here is the Trading Psychology Masterclass, which you can get info on my website. I won't go into too much detail of it because there's plenty on the website. But the basic idea is that it expands on the book in a way that like kind of walks you through step by step how to complete mental hand histories, how to map your pattern, how to complete an A to C game analysis, how to set goals and in kind of my formulation. And then you get to hear, lots of examples from lots of different traders. I talk about, kind of fundamental principles, many of which we've talked about today. So yeah, I think if you've gotten something out of the book and you want to take the next step with a lot of kind of hands-on work, then the masterclass can certainly help. Do you have any thoughts regarding Denise Scholl's market mind games approach to trading, that emotions and feelings should not be suppressed or ignored, but rather recognized as a key component of thinking, perception, and cognition? Yeah, she's right. And, I think in general, right, emotions are not the problem. Emotions are a signal. We need emotions to drive our ability to be at our best, right? It is not possible for you to be emotionless, right? That cold, robotic, stoic state. You need emotion to even just power your day-to-day performance, to be motivated. Like motivation is an emotion, confidence, an emotion. So yeah, we need them. And, as Denise and the research that she kind of prioritizes shows, is that emotion really is aiding and part of decision-making. So to me, I look at emotions as being signals of underlying flaws, right? They're signals for lots of things. Underlying flaws being kind of the deeper part, but they also might be signaling weaknesses in your strategy, as I mentioned earlier, or if you are very clear, then they might be signals of intuition, right? That your fear is actually an accurate sense that the market and your existing positions are right for each other. So get out. Or some excitement might be an indication like, oh my God, like there's a big opportunity here and I need to hop in. So yeah, emotions are essential. Maybe one more real quick. Yeah, I'm going to answer this one. What is your number one psychology tip or trick that you would recommend? Stop looking for tips and tricks, or tips and tricks, because if that's how you're thinking about this, then you're looking for the easy way out. So I'm not saying that we're going to make things like exponentially hard for you. I'm not trying to make things hard, but you have to appreciate the difficulty that it is, right? If you're going to be a successful trader, you have to do something that is atypical, right? Is not normal, which means you have to do something that is not like this, not tips and tricks, right? You got to do the work, as John helped to remind me of.
Yeah, that's always the case, isn't it? So there was one more in there. Somebody asked in the chat, Jared, what's your handicap? If that's not privileged.
No, it's not privileged. You can look it up online. No,
oh, that's right.
I'm a +1 right now. Yeah, got some big tournaments coming up. US Open qualifier, local Philadelphia mid-am later in the year. So yeah, this is kind of set year 2 of getting my game back sharp again. I think year 3 will be the best one, but I think I can still compete this year. So
can I ask you one thing?
Yeah.
You seem to be a very healthy, well-rounded person. What's one of your weaknesses?
Focus.
Focus.
Yeah. I mean, I have a creative, active brain. And so, yeah, it's hard for me to like move things forward as efficiently as I would love to. Right. So I have lots of fires in going, lots of projects I want to do. And, I kind of meander them all along. And if I could, just like kind of hold my feet to the fire more, that would be great.
You're trying to multitask.
Yeah. And I kind of have to, I mean, but there's a way to do it that I know, and I'm getting better at it. I'd say I've definitely gotten better over the last, couple of years as I've been focused on it, but it's a slow slog.
I have that same thing, especially when I'm reading. I've never been a very good reader. So your book, any trading book that I've ever read, they're textbooks. They're not novels. They're not quick reads. I got to read and reread and do the exercises. to do the work for these. These are, I don't know if it's a focus thing on me or if they're just difficulty to get to. They're textbooks. They're not.
Well, and I think it's
readers.
like when you're taking it that way, it is okay to take it slow because there's a lot to absorb. And I think,
It is.
right, if I would say the best way to, I think, to read my book is like skim through the whole thing once, kind of get the lay of the land, and then go back in and pick and choose. Like, all right, probably have a good sense that like I need to start with anger, and I'm going to go through the mapping process. And I think if you try to read through it sequentially right out of the gate, like really deep, and yes, there is an audio version, then it's going to make it a little bit harder for you to kind of train yourself there. But
yeah, I just kind of pushed my way through first, and I'm going through the second time now.
Exactly. Yeah. And as Charles is asking, yes, all of this material will work on the golf course too. It's the same stuff that I work on with poker players. So yeah, I mean, it's the system is the same. The application differs. So yeah, there might be some unique differences, but I do love the cross training effect. Thank you, John. I love the cross training effect where you can kind of work on, issues in multiple domains at once, and yeah, get it done.
That's great. And such a great book that it encouraged our Hoag to learn to read. That's great.
Yes.
Long time. He went really far without that. So thanks so much, Jared, for stopping by once again. You can check out his books, Mental Game of Trading, Mental Game of Poker. Great stuff in there. Always a pleasure to have you. Hope you'll come back sometime.
Sure. Yeah, man. Always love these. Good.
Thanks,
Yeah,
Jared.
good group, lots of good questions. And if I don't come back, then I'm just gonna miss you guys too much.
Oh, well, we'll do that. We'll play around sometime.
There we go. Perfect.
There we go. And then also, if you had questions that didn't get answered, feel free to stop by Group Coaching with Hoag, which is when, Hoag?
Group coaching is Monday and Wednesdays, 12:30.
So hope to see you there. Check down the site. Great stuff in the comments. Hope you all are making progress each day. And you want to sign us off, Hoag, because everyone loves your voice. Someone said sound like a movie.
Well, it's very nice. It comes from 20 years of screaming and hollering in the trading pits. But Jared, good luck on your tournaments. Just remember, swing easy.
All in the hips.
All in the hips.
All in the hips.
All right. Well, let us know how things go, and we'll
do.
We'll talk to you soon.
Nice chance. See you guys.
Bye.